So, welcome again, everybody. I wanna start with, yeah, this one is probably good. You should ask more questions. I mean, I'm not gonna force you because obviously it's your experience. You can do whatever you want. But for example, if I would buy something like this, my main intention would be to collect experience myself and then ask questions. I mean, I can sit here, I can talk about the same things we always talk, and sometimes for example, last stream, I remember we had like 30 minutes left. And if I were in one of your positions and trying to figure out trading, trying to learn, for example, my strategy right now, I would ask as many questions as I can because I can then explain whatever happens right now in the market. And I have no problem with that. I can fill 30 minutes with whatever. But I think the most effective way to use these kind of sessions is by you making experiences and then asking questions. This is at least my view. And I said, I'm not going to force you or whatever. And I just want to let you know there are no stupid questions because I mean, obviously, if people keep on repeating the same question over and over and over, I at some point will probably say, hey, bro, we talk about this every session. Or maybe it's such a simple question you can figure out with AI or the internet in general. But what I mean is I will never be mad or anything. There are no stupid questions. Ask whatever you want, whenever you want, also in between the sessions. If you have experiences, setups, because I can only show you what I do, and I usually do the same thing most of the time. Right now I'm doing some different things, for example, the momentum strategy we're going to look into. But in general, I can just tell you about my experience, and if this is helpful, good. But for example, for me, it would be most effective if I want to learn something, if somebody looks at my mistakes or my setups or my achievements and gives me a second opinion. And I obviously can only do that if you share something with me or ask questions. Just wanted to let you know, there are no stupid questions. Ask whatever, whenever you want. Then let's do the reflections. I think it's best to start with everything in the Discord and then we jump to the charts. First of all, again, Joe, really, really great stuff. I love that you are so persistent. You post it every week. Doesn't really matter your outcome. You just come up into this channel and you post whatever happened and you reflect on it. And as said, I love it because it's honest, it's real, it's consistent, and it will help you a lot. If this is already a routine to you, it doesn't really matter what else you do. Sometimes you take more trades, sometimes you take less, but if this kind of reflection is a routine to you, you're already on such a great path, really, because for example, this is what helped me the most, like doing those reflections for myself, actions for the week, all of those things. Great, great stuff. What you said here, physical over exertion. Okay, I never heard or read that word. Maybe I heard it before. And the cheap dopamine, social media, and entertainment fell off the horse. So to that, I'm gonna say we are all humans. So I also want to be completely honest. Sometimes I lose myself in something like that as well because I use social media primarily for content creation, whether it be X, YouTube, and Instagram. So if I look at all of my hours combined, I will probably spend at least 70 to 80 hours percent of those hours producing content, not consuming. But sometimes I start consuming for whatever reason. For example, let's take the cheapest one of all. It's probably Instagram for me, even though the dumbest and the weirdest is probably X. But let's take Instagram because this is something that's not really work related. Even if I scroll in X, it's somewhat trading related, even though it's crap most of the time. But in general, you could say it's somewhat a little bit work related, but in general, as I said, it's a waste of time. But let's take Instagram because in Instagram I love to watch, for example, ski videos, surf videos, people doing funny things videos, and the algorithm obviously knows that. So if I start, for example, posting my own shit and then start scrolling a bit, or somebody sent me something or linked me or whatever, and then it's very easy to get hooked because I mean it's designed that way, right? And I don't want to pretend I'm not a human and I not fall for something like that sometimes, but it's always a question of how much and how long, and getting as soon as you can back on the horse. And for example, this happens, and sometimes it's also even fun, right? Sometimes it's fun to watch fun videos or to watch exciting videos or whatever it is. Sometimes it's totally fine, but we are again back at these at this 80-20 rule, where 80% should be productive and 20% should maybe be recreational. And with recreational, I really mean something like that, like something really brain dead. I mean, there are better ways to spend time, obviously, and to recreate yourself, but I mean, sometimes it's, in my view, totally fine. What I do is to limit my screen time or my Instagram app time, for example. It's limited to 1 hour to give me time to post my own stuff. And I usually don't even pull up Instagram if I don't have the intention to post something myself, and then it's a question of getting hooked. And if I get hooked, I spend already probably some time doing my own stuff, and then getting hooked for maybe half an hour, and then my app says me, okay, it tells me, okay, it's time to go, and I then do that. And so my time is very, very limited, and obviously this also does not happen every single day. And so my crappy waste of time is very, very, very little compared to what I spend in cutting videos and editing and writing and blah. Maybe you find a way to balance this, and falling off the horse is not a problem. Everybody falls off the horse every now and then. It's just about, the only thing is to get back up. And this is what I also said last time. I don't want to pretend to be perfect. I don't want to pretend or lie or create this illusion of myself as being this uber god, having everything in control. I try to be in control as much as I can, doing the right things as much as I can, but as said, I'm also human. It's about getting up. For example, also a good example, you miss one workout, didn't happen for a long time to me, but let's imagine you miss one workout. What is the best choice? To suffer from it or to just go the next time when you can? So just keeping up or taking on the routine again is simply the only thing you can do and you should do. And don't be mad at yourself. It happens to everybody. I mean, sizing up without a reasonable reason, bad one, really. Because I mean, you can do everything, and the momentum strategy I will show you, you will think it's total madness and totally brain dead. And it is, actually, it is, but it works. The thing is, you can do so many brain dead things in this market, and there is not just one way to make money. And the most important thing for everything else you do is simply that you keep your risk in check. And then you can play around, try around whatever you want. Obviously, if you try something you never did before, or if it's something risky or brain dead, like the momentum strategy, your risk should be a fraction of that, what you would play on something you have already backtested and experience and data on. So obviously there is a big difference, but keeping the size in check is a big one, because this is pretty much the only reason that is really potentially game ending or game over for you, because this is the reason why people blow up. It's the only reason why people blow up. Because if you, for example, only risk 1%, the statistical chance of you blowing up an account, like losing 100 times in a row, is very, very unlikely. Even though your strategy might be the worst in the world, you will take a trade which ends in a profit eventually. It's just by chance. And so, as said, the risk management, it's really the most important thing. So take yourself by the nose and hold yourself accountable for that. And then you can do whatever you want, pretty much, in like terms of something that's reasonable TA wise. I mean, what you say here, it's very easy to give yourself credit for the losses and not give yourself credit for the wins. If you, for example, follow your plan, you manage your risk, you follow your strategy, you also realize that you learned something, and that's the reason why you won this trade, you can also give you credit for that. We are sometimes a bit harsh to ourselves. I don't know if this is the reason for you. It's definitely a reason, something for me, that I sometimes be a bit harsh to myself. And trade outcomes are to a certain degree random. But if you follow your system and the structure, obviously we have the statistics a bit in our control. Every trade can fail, even though the best strategy, it can simply still fail. So there is a certain degree to of randomness, especially the lower the time frame. But in general, it's not completely random. It's not, you still have some metrics in your control. And the most important, as we talked about, is size, risk management, and then all those technicals, which then allow you to play a certain win rate, which then allow you to, if your position management is good, to have a certain RR. So do you have some metrics in your control? And if you control the things you can control with purpose and intention and the right way, it's a win. And so you can give yourself credit for that. And I mean, loss aversion, I just had to read it again so I don't miss anything. Loss aversion. So for example, I was always addicted to winning. So, and this is something we are all a bit different about. I had several mentees and I usually ask the questions. Ask yourself, where is the fear coming from? Is it coming from you trying to avoid losses, or is the win coming from the fear coming from you trying to win no matter what? And obviously this, if you attach to something, this also leads to something on the other side of the spectrum, because it's all about balance. And so, for example, I was so addicted to winning that the losses felt bad. I was never really fearful about losing. I can't really say that. Maybe in connection to then doing this publicly and all that, there is maybe some kind of fear. But just for myself, I don't have a fear of losing, but I had this kind of urge to win all the time. And I think it's the right way to focus on the win. But obviously, if this leads to doing something that's out of your system or something that's not reasonable, yeah, then obviously it's not helpful at all. And that's a good question you can ask yourself. So what is holding you back? Is it fear of losing, or is it the addiction to winning? Because it will just tell you something about your personality. And with this information, you learn to, yeah, how to not program in this sense, but yeah, how to handle yourself. And this probably means you were physically exhausted, if I understand this right. Can come from several reasons. And this is also what I mean by mental capacities. For example, if I do a lot of skiing, so right now you see me doing a lot of things in the office, writing, doing videos, this, trading, because I have the time and I have the mental capacities. When I was out there skiing in winter for 5 days a week, I was not doing all that because I was just toasted at the end of the day and I was not at the office all day. So when should I do it? And then if I had the time, I rather spend it otherwise, because I knew going into trying trying to trade with this kind of mental state with my batteries pretty much empty is not a good idea. And if you have the control over this physical exhaustion, you can obviously try to keep it a bit like balanced, so you have more mental energy for trading in this sense. If it's coming from your job, for example, my job was also physically very demanding. I couldn't change that really. Maybe you find another way to find more balance in this sense. And yeah, in the end, actions for the week, I think you already got it yourself. I'm just saying my opinion to that, my 2 cents. But I think you got this. As said, everything I read from you, everything that comes every week, you can be proud of yourself that you come out here and share it, especially with everybody else, because it's something else I know. But yeah, nice consistency, really. First of all, this looks kind of good. I mean, I've not seen this before. I don't know what this rating is about, but it seems to be consistent. I mean, you have some outliers here, but in general, it depends on what they are measuring, but not big spikes in either direction. Yeah, so this is a big one. First of all, also thank you for sharing. I know you're not here, or I don't see it, but you shouldn't be here, as you said. Um, Thanks for sharing. Also, very nice that you do that here in front of the group. Flip-flop between entering the trade and closing it. Classic. It's something we all deal with to a certain degree, and for for some it's worse, for some it's not so worse. And a big catalyst for that is what you said here: limiting exposure to X, other opinions. So what I see, people that have the worst problems in this regard, flip-flopping and not being sure about their own ideas, is because they don't trade their own ideas. And if you don't trade your own ideas, if you don't understand the strategy, if you don't understand why you do what you do, it's just somebody else's knowledge or opinion. Obviously, where should confidence come from? And that's a big one. And you have the solution already here. You said it yourself. This could be a big one. I don't know what else is going on in your life or in general how you think. I mean, it's very human to question decisions, but confidence comes from competence, right? And the competence in trading comes mainly from experience, from executing, from knowing your edge and understanding why you do what you do. So for me, for example, when I shorted the current support and resistance level on BTC, I was pretty convinced about this, and not convinced, pretty confident in this, because I knew, okay, this is a support and resistance level. It's the 80K psychological key level. And my confidence comes from two things. First of all, I know it's a technical level. So my strategy says execute. Fuck it. I don't care about any other opinions or whatever, because this is a level, this is a technical level within my strategy, so I execute. The second pillar of my confidence is that my risk is very defined. And when my risk is defined, it doesn't really matter what happens, because I get stopped. Yeah. So what? 1%, 2%. So what? I mean, my BTC short paid me probably, I don't know, I have to calculate it. It's always a bit weird with this data when I remove funds from this exchange and blah, but it's probably 20 or 30%. You know, I can lose 30 of those trades if I want to. And yeah, then the profit is gone. Okay, good, not nice. I'm living from my profit gains, from my trading gains. So sure, I don't want that, but I mean, if it's defined, yeah, it's in my strategy, it's a technical level, my risk is managed, so I'm 100% confident in this level. But then you, for example, take X into account, and I posted this idea. Not that below my post, usually people, maybe it's because my account is small, but usually my comments are pretty nice, so full of nice people. And nobody really said anything. It's just like, oh, nice setup, oh, thanks for sharing, and this and that. But one guy said the whole money tower community is not shorting this level, so he's also not shorting it, but because everybody else is shorting it. And yeah, might be. I've seen also other posts of people shorting this and being bearish here and that. Yeah, and so what? It's my technical level. I know why I'm trading this. It could have worked. Now it didn't. I had a limited risk. Yeah, so what's all the fuss about? And now it's going higher, or it seems that it's going higher from this level. And I said, once we flip this level, it's a technical resistance, and you've seen the reaction on this level. So there was a technical resistance. It got eaten. Okay, so I got stopped. Now, if we really flip this level over this day, next days, we'll probably go up to the high 90s. So I had this level, it didn't work. Now, if we should reject from here, I can still re-enter. I could have waited a bit longer, all of that. So it's always a question of how many variables I want to take into account. Sometimes it's just wise to stick to an easy technical game plan. Don't take too many variables. Don't think you can outsmart it, because this will only lead to more decisions you have to make. And always be honest with yourself about how big your mental capacities regarding trading is, and your mental energy regarding what life demands of you. And so sometimes it's wise to simply stick to a very, very mechanical system where you don't have to make a lot of decisions, because every decision will add pressure, because then it's always like until you have your answer, which can take a lot of time on a higher time frame, it's always this kind of pressure, and it will always be only released once you get stopped or once the trade moves in your direction or far enough in your direction so you can remove the risk. And this kind of pressure adds up. If you take 5 positions, obviously it adds more. And again, mental capacities, we have limited of that. And decision making is for most people in daily life already something. And now with trading, real consequences and all that, it gets just amplified. And so, yeah, to sum it up, not looking at too many other opinions, believing or trusting your own system is probably the better word. And then with limited risk, you have all the confidence in the world because you understand the statistics and nothing can really happen to you. And so, yeah. I was there myself, completely delete Instagram, Facebook. The funny thing is, and other distractions, you name it, there's nowadays the world is one big distraction actually, but at least the human world. But what I want to say is I had none of that really. I had no Instagram, I had no Facebook, I had no X, I had pretty much, I had not even a television back at home, to be honest. I spent all my time outside doing whatever, sometimes not even spending my time not as wise, drinking and all that. But hey, this was my life. I had a lot of fun. And I actually always saw life is really happening outside of this technical screen world. And that's why I didn't have all of that. And I came back in touch with this world through trading and investing, because then obviously I spent more time on screens, I spent more time on YouTube. Again, I mean, I did all of that when I was younger. I was probably one of the most phone addicted people you can imagine. Clash of Clans and all that when I was 15, 16, 17. Yeah, I mean, I woke up and my face was looking at the screen already. To wake up better was my explanation, because I got the screen woke me up, you know. So yeah. Anyway, let me check. Yeah, probably not that important. Let's see how this will resolve, and we can talk about that later. So back to that, I came into this back into this world, Instagram, Facebook, social media, through trading actually. And I didn't use Instagram for that, didn't use Facebook for that. But after a year or two, I used X, because I watched YouTube and this guy always said, oh, this and that and X and X and X. And then I said, okay, good, let's try it. And one eye is smiling and one eye is crying, because it dragged me way too much into the altcoin space. I mean, I didn't get wrecked or anything, but I let lots of profits on the table from my very, 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 very good DCA buys of BTC and other US stocks. I also bought Nvidia before it did a 10x, and I sold at 2 or 3x because I thought it's wise to go further down the risk curve. And so I let a lot of profits on the table because I was pretty much using X, to be really honest with you guys. But at the same time, it also introduced me to real trading. And obviously I can now not look back and say what would have happened if I did not use X. Maybe it would have been even worse. Who knows? I don't know. But what I want to say is I got in touch with a lot of crap from this point on. And it also introduced me back to the social media addictions and all that. But from the beginning, I also realized, okay, you don't want to be a user, you don't want to be a consumer, you want to be a producer. And then I also started my own account with that after a very short while already. And so, yeah, so as I said, one eye is crying, one eye is smiling. And now I have this pretty incredible skill set, which now helps me to navigate all kinds of market situations. And as I said, I don't know, maybe I would have wrote all those profits up and down without even realizing any of them. But just saying that I would have been, like, if I would have played it more or less, let's say 70, 80% right, I would have been better off by just sticking to those things I already knew. And some things just made it more complicated. It's not always that all of those trading things from the beginning on made everything easier. I think many people leave a lot of profits on the table, like I did with the US stock market majors, because I wanted to be too perfect, probably, and wanted to had too much of a trading mindset. So yeah, and this also came from social media. And now, as said, I'm using it mainly as producer. And to be honest, I would recommend to everybody to have as little exposure to those things as possible, even though I believe that there is a lot of quality to be found and a lot of great people out there sharing great things. The whole platforms are still very addictive and they trying to drag you into their shit and not just the good stuff. So yeah. And by the way, it's not just the algorithm, for example, on Instagram knows what I like, but it also suggests me and test things, how I react and respond to certain things. And then it's also running some kind of agenda and trying to, yeah, manipulate my thoughts into a certain way because it knows me, it knows my category of what kind of human I am, and it feeds me more or less to make me stay in this bubble, obviously to stay on the platform, but also to put me in this bubble of like-minded people and to get a little bit of like divided and shut off into your own bubble and don't listen and talk and look at those people. They're the problem for everything. And I can feel this getting more and more, and especially the more time you spend in those algorithms, the better they get to know you, the more sophisticated they get with their agenda. I think that's a good idea, to be honest. And then what will happen, you will see if it will work better or not for you, and then you can always start using it again. I mean, it will be around for probably ever. And yeah, and I also shared this. This is my performance for April. I mean, this is from the TradFi account, and for those who have seen it, should I pull it up? Yeah, you guys have seen it. The BitGet account and the Kraken account are obviously in profits, the crypto positions. I made some mistakes, as said, I was a bit too biased. If I would have followed my plan of buying the US stock managers, but after a 10% drop, I waited a bit too long, was trying to be too perfect, because otherwise this will probably be at plus 10 or even more. So yeah, but in the end, what has really happened? I paid back some unrealized gains. I left some profits on the table, but in the end, the world didn't end, and I just had to get back on the saddle myself, because for me, even though all my accounts ended up positive, like even though this one was very small, it felt like a big loss. And especially then sharing this, and my goal is 10%, and then sharing this with the public and everything, it felt like a big loss. But then I have to remind myself, hey, all of the 3 accounts are green. Don't cry like a little baby. It's everything is all right. But for me, for myself, this is back to I'm addicted to winning. This even all accounts, 2 accounts reached target, 1 didn't, and I feel bad about myself. Yeah, not very helpful. And again, also I want to be completely transparent with my P&L, and there will also be a red month at some point, I suppose, but we will see. And if you're interested, it's also here. Hello, Andy. Hello, Chris. Yeah, and as said, I can't stress it enough. Risk management, the only thing really that is a really bad mistake is not managing your risk. Because otherwise, as I said, you can try around, you can play around, and the more experience, the more data you have to strategy, the more you can risk on this, in my view. If you try something new, if you try something risky, your risk should be smaller. And so this is the real only mistake people can make. Obviously, yeah, if you understand the strategy not enough, also a mistake at some point or to some degree, but with risk management, 60-70% of what you should really do with every single trade is already done. Exhaustion from sport, yeah, maybe. I mean, I don't want to tell you do less sport because I know how it is. I want to exhaust myself from sport as well. But obviously, if it hurts your trading and you want to now be a trader, maybe you find a better balance there. So maybe you can figure something out that it's working better. But I know how it is in sport. For example, when there is good snow, I go out there every 4 or 5 days. 4 or 5 days in a row every day, and I'm completely done. And I don't want to change this for more screen time. So I know how it is. I don't want to tell you do that or do this, but obviously if you want to make trading work, in the time when I really went big into trading, I mean, it was summer. In summer, I want to maybe spend some time in the sun, but in general, there's not something calling me like skiing. And then I spent so much time in front of the screen, and I optimized my life for trading. This means sport as much as it helped me to trade better or to be more focused while still maintaining my consistency to reach my physical goals. But trading got the priority in this time. Third chasm. Yeah, so we can talk about charts. Let me just look at my smart little book here. I think, yeah, the next thing would be charts anyway. So let's do that. Let's look at BTC high time frame. So spent some time to make this chart fancy because I got a bit lazy with that, especially now in winter. I was always like, yeah, there's the level. Come on, you see it. And because I see it, and then I now remember spending lots of time in my office that I should probably do a little more work to make everything visible what I see. And what I mean by if you flip this level, 90s are probably on the table. Is simply, it's just a probabilistic statement, right? I can't know either, and I don't really care because I say something like that to people who understand its probabilities. What I mean by that, this is a very important technical resistance because here, because of here, so this whole area here could be considered supply and demand. We touched parts of that as well, but with this low here, this was the most important support and resistance area. It's also around the 80K key level. And with this psychological level and all the technicals I've just shown, this made it a very important level, and it's also sitting around the 0.5. So I consider this whole area here, the blue area, as the most important resistance level till this point, more or less. And this is the next most important resistance level simply because we have the 90K key level, we have the 0.5 up here, and this is like this is the supply that ignited this move, right? So whales or institutions and everybody sold aggressive here. And this means they will most likely sell aggressive here again, simply because that's the language they have agreed on operating on. And obviously also because retail is, for example, looking at the 90K key level, and after such a move, should this just continue higher, many people are going to be bullish. And the 0.5 as equilibrium of this whole swing, very important target. And it became all more likely with this close above this 0.5 because once a move closes above the 0.5, this is true for most time frames, means that the range high becomes very likely. And the range high in this case is this supply and the 0.5 of this bigger range. And then we have the 100K key level right above. And this just makes me, I always try to play whale or to institution or market maker and think, what would I do to make the most money, to manage my positions most effectively? And for that, I need retail liquidity, right? Because those other institutions and whales will most likely not fall for my trap. I mean, there are probably also some dumb ones, but in general, I target retail. And what is retail looking at? Retail is looking at psychological key levels, for example, because for the majority playing the investment game, looking at coin market cap in order to know where their coin is, they're gonna look at coin market cap, and coin market cap is say, oh, we reclaimed 80K, for example. And now we have this very structural high here, and the high 90s, I would consider this as the next logical target. But we could also reject from here. And this is the very important thing I always talk about. reaction over prediction, because I predict where price will most likely go by, for example, we flip the support and resistance level, makes and the 0.5 here makes the range high likely. So the range high is in this case this big blue area, and this means once price is here and gives me signs of exhaustion, maybe order flow, maybe here, started making lower highs, starting breaking the momentum, you name it, I will then consider also being on the sell side, in this case taking a short, for example, or selling my maybe altcoin longs, depending on how they look. Gives me confidence for altcoins as well, especially. Yeah. And then the 100K key level just lurks here. We front run it here once. Will we do it again? Because people look at it and say, oh yeah, I'm gonna sell at 100K. Or will we this time just tag it, even take this high? Because imagine they push, because for them this move is very expensive, right? If BTC as major asset moves, yeah, 50% or something from the Piccolo probably. This is a lot of money flowing into this, right? We have looked at the volume last stream or the stream before that, the market cap, all that. So there is like lots of money needed to do that. That's why they try to squeeze shorts, because this makes the moves cheaper. And they also only push it as high as necessary. And the question is 100K necessary? And I would say after such a prolonged move up where they invested a lot of money, when they push it to this point here, where there's an obvious supply, where many people will say probably thousands of order blocks, thousands of people saying this is supply and selling, and 100K got front run before and this and that. I, as market maker, I will probably create some price action to make people short this, because everybody sees the supply, and then let it spike one more time above this, tagging the 100K level all over the news. 100K BTC, majority of retail people rushes back into it, taking even this structural high, which will also create the impression of we are creating higher time frame higher highs now. And maybe this whole thing ends up being a liquidity grab. And if not, this means close above, then maybe pullback and then higher. But if this ends up being a liquidity grab and all the stars align, the usual stuff like giga bullish retail and all that, this would be one of the most powerful levels. This is what I would do once I flip this level. This is what I would do as market maker. And that's why I say, okay, this becomes most likely, probabilistic speaking, from my perspective. But at the same time, as said, I'm not the guy who says I can predict price by looking at the left candles here and say, oh yeah, there's something, so price must reverse from this exact dollar price here. No, I'm looking at this area and say around this whole key area here, price action will develop. We will either spike it, we will front run it, and I will get signs that allow me to enter my trades. And for example, sometimes those signs are even misleading, right? Because when I entered here, you see how we rejected from the support and resistance level. Look at this 12-hour candle. Look at this volume spike. To me, this was prime volume spread, right? Big rejection, big volume. Again, big wick. The body went bigger here in this case, but still big volume. There was lots of selling going on. Also with this here from the 0.5. Lots of selling. For me, this was definitely something I wanted to execute on. But why I flipped now bullish and like I talked in my video today, is because we just eat up all the selling. The sellers have no control. The sellers have no power. There were a lot of sellers because it's a technical resistance level. But after all buyers are in control, there is a bigger plan ongoing. And we will see how the next few days develop. I'm not saying it's already done, because we haven't really closed the full body above this whole area here, which I marked out before between 0.5 and this one. And so I'm still holding my feet still, but I'm positioned anyway. And as said, with the close above the 0.5 already, the range high became much more likely. Doesn't mean we cannot pull back before that, right? So let's see. And if we get this breakdown here, if we get a loss of momentum, I can still decide to short this area as well, because the market is rewarding fluidity in my view. Yeah, I think that sums it up. Yeah, for example, once we start rolling over here, breaking this local trend line here, which becomes more and more likely because it's simply a very strong trend. At some point we will probably lose it and then either go higher or break down. But once we lose it and start making lower highs and lower lows, maybe I will consider to re-enter in an idea if it's still within this area. So for example, if it happens from this price here, leaves this big wick and everything, maybe I will consider that. But for now, for me, all of this screams strength, and strength. Maybe I shouldn't have said it 3 times in a row. So yeah, maybe, but now I said I'm gonna wait, and I will share if something changes for me. I will share it with you guys anyway. Yeah, that's what I mean by swing failure pattern, by spiking above it, tagging 100K and then rolling over again. Because this is like, this would be the perfect trap. After such a move where everybody gets bullish on the way up, and then you even take 100K, maybe even close a daily candle above here or something like that, this would be probably one of the biggest traps ever. And then rolling over, because we then took the supply, we took the high, everybody will scream high, the bull market is back, and then I would definitely nuke price again if I were a market maker. And that's why swing highs and swing lows are usually much better, or not much better, but they are pretty much the strongest level. So this is your ace, those swing highs and swing lows. If you put them into context, these levels can deliver the best setup simply because they're always at the extreme, and at the extreme people are at their extreme, emotionally speaking. And after such a move, imagine the euphoria, imagine what altcoins could do when BTC does that. And yeah, this would probably be the biggest trap of the cycle, even though we had so many traps already. Not even sure this is right. Yeah, no problem. Yeah, while Check is typing, we can have a look at PayPal. By the way, here Nova's open, 33% TP for me. We will probably just fill the gap, and I expect, to be honest, that we go higher from here. But yeah, I TP'd here, so obviously you can try to push it a bit higher, which I do with 70% of the position. But I like to lock something in after such moves. PayPal. So I took this lower time frame tighter position here. I mean, it's still a 6% stop loss, but I thought, why not? And I added this to my, where's this bigger position? I added this to my bigger position, which looks like this now, which adds just risk to the same idea, right? And if you read the study area and everything I shared so far, you know that I scale into my positions sometimes with 2 separate positions, simply because, which is probably, yeah, low 40 somewhere. Because for several reasons. So first of all, adding tight means a better R, which means simply I can acquire more shares, and it gives me a clearer invalidation for this idea. Because if I take, for example, if I add to this investment position here, the stop loss is 15-16%, and I expect, for example, if we lose this level, we go back here. So I can sell myself from this stop loss probably 5% or something, 5, 6, 7, 8% of potential not being in this drawdown. I mean, obvious, because I take this defined risk, but at the same time I added to this investment position because this gives me full flexibility, because this is wide and safe. So if we lose this low, maybe this is a soft stop, maybe we sweep it, I don't know, but if we don't close below, I will definitely keep that position, because the entry on PayPal here is just too great, and it's a teal musk kind of company, and they have their own unique behaviors, like very aggressive volatility. So if there is a sweep or something without a real high time frame close below, I might just add. So this is not a hard stop. It's just an investment back, but this is a hard stop, and this allows me to be more aggressive with size. So I can add 0.5% risk to this whole idea and get obviously a lot more shares with this type of stop loss, which I like a lot, to split my ideas up like that. Gives me just more control. And another thing I wanted to show you on this chart, because you see a lot of people using those things, and I use them sometimes myself. And this is very nice to see where the most volume was traded. And look at this. So there is no, it's not a surprise that it's here, right? Because we spend so much time here. And this FEG is pretty much nothing, it's air. And this FEG up is also air. In this case, you see there is pretty much no volume here. Obviously, if you include this, there will be a bit more volume up here now. But everywhere where it's just gaps, there is no volume traded. And this is only logical, right? Because price moves so fast, not many orders can be executed. And when price consolidates here forever, much orders are executed because of the time only. And this is why we call this demand, because accumulation, then it goes higher. And now we retest this demand, which also aligns with the highest volume node here. And obviously down here as well. But that's why if you know about order flow, and if you know how the market, what those candles mean, you don't need those tools all the time, because I can look at this chart and I can decide that the most volume was probably not traded in this candle, the most volume was probably traded here. And this is where price will come back, because when it's consolidating and it pumps and it comes back, this means traders have positioned themselves here. And like me, I'm now also adding to this position, and I'm not the only one who's supporting price now. Now the question is, who is behind this chart? I mean, who is igniting those moves? Who has the most supply? Who is the power in this chart? And I argue it's probably somewhat the teal mafia. But in general, this is why price is supported here, right? Because people support price, because traders, maybe even the teal mafia, supports price here. And this nuke was just to punish late longs, late buyers. We will see. And then we have areas where it's not so obvious, where this tool can help a lot, because I pulled it from this point on, where we entered this range for the first time below 100. And then you can decide where the most important resistance is going to be. And if you look at this chart, it's not as easy as this little range here. And then we have the support and resistance level, which acts as support and resistance for a bit longer. And the first area of it has already reacted. And then we have another strong area which also lines up with the point of control. And that's why one of my first TPs will be on the smaller position, will be here. And the nice thing about the smaller position now, to finish this completely up, here's, oh no, that's the new one. To finish this up, on the smaller position, it makes a lot of sense to TP already, because if this works, this is already 5R, right? On the bigger one, it's probably not even 3R, maybe not even 2R. It's 2R. Yeah, not that sexy, right? So it's wiser to keep this one as a very long-term position, and this one I can TP more aggressive because the RR and everything allows me to. And I also bought this one as a CFD because my plan is to sell it within this range here. And if I don't want to hold it for very long, I use a CFD simply because it's more efficient with my margin. Similar things apply on crypto, for example. I oftentimes, if I expect a very high time frame, prolonged reversal, I buy spot, remove it from exchanges. This is my biggest position then. And I also add longs to the same position, adding to the same risk. If you follow my Discord and my X for longer, you have seen me doing this last summer pretty much every single week, 3 times, where the same idea gets 2 positions. One is with leverage and one is without, or smaller leverage, wider, safer. And the other one is more aggressive, making me able to TP much earlier, shaving off some profits, which I can either put into this higher time frame position if it's coming back, or then removes already some risk, because this profit obviously stands against what I could pay for the higher time frame stop loss. Hello, Jonathan, by the way. So check here. No problem at all. Yeah, this is actually a nice opener to my next topic. Um, the US stock market strength. It's total madness, in my view, to be honest. A V shape, like a V shape from here. I mean, I expected a lot of things, but this is not what I expected, to be honest. And there's so much strength. This is also why I shifted a bit more into longs here and became a bit more aggressive also in TPing short, even though the Palantir TP on my short was not ideal. It's still going a bit lower. But I'm looking more for longs now for this reason, simply because somewhat there, maybe they injected the liquidity, maybe it was already there, we had dividend season, whatever, but there's incredible strength. This does not mean it applies one-to-one to crypto, but I also see those strength signs in crypto. And so I think we have probably another risk on outperformance moment. And the beautiful thing is, as you have seen from me here, I took all of those longs you have seen in Discord here, and they were all lagging behind a little bit because not everything is moving together, not in the stock market, and also not in the crypto market. There's a reason why I decided to take BNB here, because it's not as high as, for example, Doge. Doge is already significantly higher from this low, and so this allows me to play tighter, play with clearer invalidation. That's why I just chose BNB. I don't care about BNB itself. I just like the structure more. And the same thing applies for stocks, for most stocks. I took those stock plays. I mean, PayPal is different because it's just a nice company and it's down 90%. But I genuinely don't care about Novo, but it was lagging behind this pump. I also don't really care about Oracle, even though I know it's a very nice stock for the US tech sector, and maybe I TP'd a bit too much, but I still have exposure left. And it was lagging behind to those majors. SAP was also lagging behind. I mean, we have this crazy week today. Let's see how this will resolve, but this doesn't look too strong here. But let's see. And so I look for those who lag behind. Also, for example, NEO is, I mean, it's a Chinese one, but it's also still very undervalued. I would like to see either strength from here or a deeper pullback back into this higher time from demand. Probably should look here. And I TP'd most of my position after this 100% pump last year publicly. You can still find that. But you see how it's really lagging behind everything else, even though it's Chinese. And I look for those, and I look for those in crypto as well. Why would I buy those that already perform super well? I have some dollar cost average bags left, and some will always lag behind. Also, Etsy was a nice one, was still also lagging behind the US majors. And so I'm looking for those, and this makes me, should this continue, this liquidity will trickle down the risk curve in the US stock market, maybe even to crypto, we will see. But in general, maybe this was already the bear market, right? Who am I to know, or who am I to say we will not now go up for 2-3 years? The market can do whatever they want and whatever it wants. It doesn't need to follow some 4-year rule or whatever. But I'm simply staying flexible. The thing that cost me a lot of performance was that I was too biased of us going a bit lower here, and we didn't do that, which is now very, yeah, annoying. And the same thing is now, looking at this, it's just going higher. And as long as this is going higher, I'm looking for those proxy plays willing to pay 1 or 2% as a stop loss should my idea not play out. But usually, if this continues higher, those proxy plays, they will lag a little bit behind, and then they will pop from every direction. And as I look at crypto, we have this steady upgrade here. I mean, today is probably, yeah, it's turning red a bit, but in general, I think it's showing incredible strength here, which I didn't expect. And that's why I look for those proxy plays like BNB. It's still down here. It's still looking kind of nice compared to other plays. And as I said, similar doing this here. And this prepares me for everything. I'm also looking at something that's not very according to premium and discount textbook, like Rocket Labs here, because if what, for example, you say is happening, we will not see a bigger pullback. Liquidity is flowing in and it's just going higher from here, or that's at least what I understood. I'm waiting for a confirmation here and then maybe build a small position up here, which is definitely not textbook. I mean, it's down 20% from this all-time high, but sometimes those stocks never come back. And if I always wait for those big pullbacks, I might miss out a whole cycle narrative, right? I mean, my biggest positions will definitely be built here if we get those levels, but I can still try with risk management to catch something within here. You see, we already get the first signs of some strength here, and maybe I can play with a 6% stop loss and a potential 20% gain for almost 3R idea, and gaining some exposure, which I can then trail higher. I did similar things last year with Rigetti and stuff. We talked about that. Looking back at this one here, and you see it's also not very discounty. I mean, it's down 40%, but discount would be down here or even down here. And it just didn't happen. And these sometimes move a bit different than your average shitcoin. And then you want to get some exposure before something like this happens. And so I'm always staying flexible. And this is also a nice transition to the next topic, the momentum strategy. And I think it's very, very good to have different strategies in your repertoire, because if you don't, you can follow one system and you can still be profitable. But for me, being so involved in so many different markets and so many different assets, I need to have some different strategies. I'm not just playing the same thing over and over and over, because if the market is telling me something different, and it's definitely telling me something different right now, I wanna find some exposure. That's not always the textbook thing I do all the time. And so looking back at Rocket Labs, I can trade this very locally, maybe getting a pullback into this area, playing with tight stop loss, and then being involved into this company, TPing up here like I did with Rigetti, for example, and then it maybe just rips higher because the narrative gains a lot of traction, like for example with the launch of SpaceX publicly and all that. So I'm always on the hunt for stuff like that. For me, it's not always just, okay, I have to wait for those levels. If they don't come, I will not be exposed. Maybe they come in 10, 15 years after a whatever 10,000% rally. And then I say, okay, now it's my time. That's not how I trade. I always try to adapt. But regarding QE, yeah, I don't have a lot of data to what this is really doing to the market. Obviously, if liquidity comes into the market, it should support prices, but who knows? It's common knowledge. Rates reducing. This is something I have a little bit of data on, and rates reducing, it's not always like COVID where they just throw money at everything and then everything pumps, or also in 2020 when rates are rising that the market needs to drop. Rising rates are also a sign of a stable market, right? Because why did we have 15 years of prolonged low rates? It was because of the financial crisis. It was because the financial system was almost breaking down. And so it's not always a good sign if they lower rates, because this means something is not really good. Hello, Rooney, by the way. And it remains to be seen. The new standard seems to be they just print money and everything is going up. The question is for how long. And I talked about this. Did I talk about this? I'm not sure anymore. But the thing is, nowadays everything is flooded with scams. Nowadays, everybody, even if you're not a good businessman, even if your business is horrible and crappy, you could keep on running it by just taking more and more loans because the interest rates were super low. And so we have a lot of crap and garbage in the system right now, and looking at crypto, looking at social media and everything, it's everywhere. The system is nothing more than a big scam. Politicians are scamming openly. Nobody cares about anything anymore. And people are always looking back at the times when everything was quality and everything was so super and so stable, and they produced material goods for eternity. But if you look at the financial system during those times, it was usually a very restrictive policy. And what this policy made was it made people to produce better, because if the system is, if money is scarce, if everything is hard, your system will simply fail if you're not good. If you're not deliver, if you're not doing a good service, building a good product, you will just cease to exist. And this is something people are scared about, but at the same time, it's also something actually to look forward to, because those scams will disappear, because there will be no money to finance scams anymore. People will be back in hard work. People will actually have to have some skills to make it. And yeah, it's probably bad for the majority of people, but at the same time, it's probably also a very, very needed cleansing we need. And sure, the problem is that mostly the wrong people get hit by something like that, because the rich at the top, they have so much and they are actually in control of some of those things, that they will not really suffer from that, which is the horrible thing about that. But for the system in general, it's better if there's not money everywhere flooding everything. And for example, if you read the book Think and Grow Rich, which I recommended a week ago or something, it's from Napoleon Hill and it's from 1937, which is obviously after the after the Great Depression. And the way he talks, first of all, things I said, I also heard from him, but to me, it's also obvious. Also, if you look at the 80s and stuff like that, after this crash, many people suffered, but then they returned back to quality because they had to. And he's living in this time talking about it. And it created then a wave of actually good businessmen, good people, good products, and a more stable system. And it should be like that. This is the funny thing is, this is exactly what Bitcoiners are talking about, or even people that believe in gold. Something that's scarce is actually what we need. And the money is not, it's not scarce. Everybody wants to be rich. Everybody wants to make it in altcoins, and everybody wants to make it in trading and everything and get rich quick nowadays. Nobody wants to really like do the hard work. I mean, it's still hard work, don't get me wrong, but like doing physical labor, hard work anymore. And I get it. I don't want to do it either, because why ruining my body for somebody else? But at the same time, it will not work without it. It will not completely work without it. And there will be a time when this will change. And so we will see what QE really means and brings over the coming years. Maybe they have to throw money at everything again, or maybe they will stop doing that. And I think if they will stop doing that, we will see how many cracks and how broken the system really is, and the garbage will be flushed out regarding businesses. And then obviously, if those crappy businesses fail, there will be so many holes in the system regarding the money, because I think in a Ponzi-like system like right now, and the way they amplified that and put fuel onto the fire over the last 15 years, it will be biblical, really. I'm not saying it happens now or in 2 years or in 5, I don't know, but eventually it has to happen, because those people pulling out money on the other side, they will not give it back. And so where is the money then? And yeah, so it's going to be turbulent times at some point. And let's see, as said, how they will do that, QE and all that. I'm not relying a lot on those data sets, to be honest, because there's so much confusion about it. And I made a post, and I made actually a very detailed chart about what interest rates mean. And before every decision, everybody's like, yeah, it means this and that, it means this and that. And I made this chart of a prolonged time where I just tracked what the forecast was, what the real data was, and what the reaction of the market was. And what I found is that it's pretty much a bit random. So there was no real consistent pattern like people pretend to see, or really see. I mean, don't want to say pretend, because some people probably really see it. But if you really have the data on your chart, you see that it's not what people think. At least not short term. I think mid to long term, There's definitely something in this data, but my knowledge about this is not deep enough that I could say, oh yeah, this will happen for sure. And especially people look back 4, 5, 6 years and they think they understand the monetary policy. But the thing is, this is around for hundreds of years. And it's definitely not just like it was with COVID and after that. And the knowledge and experience of most people in the market is exactly that. That's also why I always recommend to look further into history and like look at the 70s, 80s, 60s, 1920s. Spend some time on the charts. It's actually super fun. And then find some parallels to the system, find some parallels to now, and you will see it's not that easy. It's not what people say always. It is people that learned about the market and since the 2020 COVID crash. Yeah, and yeah, nice check. As said, it can be boring if you do it wrong, but now with AI and some maybe watch some old dokus. Is it in English? Yeah, documentaries. Um, and about those times. I mean, before the 1900s, it gets a bit rough because obviously there was no television and no cameras. But before that, for every time frame, for every decade, you will find some documentaries, and it's super fun to compare them to charts and how the masses were guided into certain directions and how monetary policy was shaping the system and the quality of products and the labor market and those things. And then you will see the times we are in right now are probably the craziest we have ever seen, not just from a technology perspective, but rather from politics and all that. So uh, fire in the madhouse is uh, is probably the most fitting. So I wanted to talk about momentum as well, and we have Luna here. And I traded last year. There's also some data on that on the in the Discord. I traded last year some momentum strategies, and I found one particular one which is just super nice and incredibly good. And after my experience yesterday, I probably have to look back into it a bit more because it's just so much fun to trade. But it requires a lot of screen time, and you really need to be in sync with the market a bit. And for me, as outdoor lover, yeah, probably not the right strategy, but it's actually the most fun scalp strategy I've ever tried. And if anyone is interested, I've got it from another trader. I don't want to lie, it's not something I've created myself, but it's from a technical perspective fucking simple. The main issue is to find the right asset at the right time, to not force this strategy onto something that it's not. And yeah, that's pretty much already it. Those three things. And the most important thing is to find the right asset at the right time and only apply it then. And this is the key thing. And for this, you really need to scan the market not all day, but for a prolonged period to really find this. And to really sum it up, you need something that's super volatile and it's aggressively trending up. And this strategy comes from the stock market. So I applied it first on the stock market. And best work, you might laugh now, but the best assets it works on is like those more or less crappy lower caps, low volume ones that trend. I have seen stocks doing 100% in one day, and I took in this move I took like 4 longs, and I doubled my account, I think, within 1 week. I mean, I paid back 40%, and then I stopped using it because I was yeah, just doing only screen for way too much time. It's super fun, but I have not found the best way to find the right asset. But if I then see, for example, Luna pumping 30% in a day, I mean, not this chart, they look actually super different, but this one even more. I know I can apply it here. And usually then once you see an asset rip 100%, okay, this is not what I've seen on the BitGet chart. because I execute this then with my eyes on the chart on my exchange and not on TradingView, because you need the precise price, you need the precise values and everything. And what you do in this move, I mean, from this point, it's 20%. For crypto, it's not even a big move for some of these assets. And what you simply do is to buy those micro pullbacks. And I mean, it sounds complete mad, right? If I tell you as a premium and discount trader, when I tell you buy those micro pullbacks into this pump, right? But this is actually what you can do. And if applied right, you take a setup maybe here. Once you get a bit of confirmation, going higher, breaking a momentum line on the 1 minute, I mean, it might be a bit hard. And then you simply TP at 3R. And then you can do the same thing again. You remove the risk, you maybe take 50% TP, maybe you take everything. Then you watch the move. And once it happens again, you can try it again. And with the right risk management, you can keep on doing that. Depending on how much time you have, depending on how much mental capacities you have, you can do this in some moves 3 or 4 times. And maybe I can find it when I in my Discord. I did that. I restructured so much. I did that with Tesla before. I'm not even sure if I did that in here. 25. So from a timing perspective, it should be no. I mean, it's something similar on higher time frame, just trading those lower swings. And here very no. I'm not sure if I shared this with the Discord because it was not my strategy, and I didn't even I actually, yeah, I didn't share it with the Discord, but I remember this move because it's in here. And on the 1 minute, let me try something. On the 1 minute, there are those micro pullbacks. And the idea of this whole strategy is that you long those micro pullbacks and you look at the volume bars. And if the volume bars, the red volume bars are simply lower than the green volume bars, you can keep on longing this. The problem is this doesn't work in crypto as well because there are so many exchanges and stuff. And the volume bars are sometimes completely mad, especially those liquidations are always higher. And then you still have seen that Luna was going up. The question is, can I find this again? I have no clue where it was really. Was it this move? Don't want to spend too much time looking for it, to be honest. It's 15th of, I sent it September. It was not this move, but it must be close. It wasn't this choppy range here. Yeah. No, I remember. This was the big move down. Come on. Could it be? I just try it one more time here. If it's not the move, I give up because I don't want to spend the rest of the stream searching for it. And it's so long ago. It should be this one. If it's not this one. Yeah, it's the one. Ha! Nice. So you see something like this. Tesla, in this case, it's actually this move, right? You see the market opens and it rips super aggressive. You have no entry because why? I mean, it's just going sideways and then it does this. But once you see something like this means strength. It means momentum, right? And this is what this strategy is aiming for. So you have this micro pullback here and look at the volume bars. They're smaller than the green ones, right? And so you can find your entry here and you put your stop loss simply below this low, somewhere here. Maybe it was not the perfect entry, maybe it looks like that. And then you TP at 3R. And you can do the same thing again. You see up here, micro pullback, 2 red candles, but the volume bar is lower. You can do the same thing again. And I know it sounds mad. And you need, and the most important thing for this strategy is simply that you have the right asset at the right time. You cannot force this on every chart. Oh, there is a pump. You do that. Look at how aggressive this pump is. From the opening, we did 10%. This is a lot for a stock like Tesla. I mean, it's a huge stock. You see, red volume bars lower, red volume bars lower. Move continues. You can do the same thing. Super fucking simple edge, and it's so much fun because it's maybe up to this point it's 1 hour and you take 3-4 trades and 3R, 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 and then at some point here you see how the first red bars come above the blue line. The blue line is in this case our average volume, and the market starts going sideways. We have no real strength, no real momentum like here. This is where you TP all of them, and this is where you TP so all of your rest, and where you simply stop doing it. Don't try to force it on something that it's not that anymore. You need to know when to stop. And in this case, 3R, the rest can turn out to an RR monster. 3R, the rest out can turn out to an RR monster. And same here. Maybe you even take a trade like a trade in here. But what I mean is this will compound to so much. And I did something similar on Luna yesterday on the 1 minute, longing those micro pullbacks, TPing at 3R, longing those micro pullbacks, TPing at 3R, and then I took one stop loss here. Unfortunately, it was a bit bigger because the move was so aggressive and I got stopped on a bit more because I used 5x leverage. And I did the same thing on it's also some Luna crap. And I didn't do it on the 1 minute because look at this chart, it's looking like the 1 second. I did the same thing here on the 1 hour. Don't let me lie, but I think it was here. Or no, it was here actually. Here. And I based this on this other Luna. I TP'd up here fully out of this position when I shared it in the Discord, and now I came back to my entry. And I simply do that because I don't care about Luna specifically, but I've seen how volatile it is lately. And volatility on those crappy coins always means imbalances, always means inefficiencies to drain. And as I said, look at those volume bars, you don't have the same reliable signal as I've shown you here in Tesla. Because look at this, and you will find setups like this. There are also stocks moving like Luna, and they follow this pattern with the volume because they are not as manipulated. They are not as liquidation hunting assets, like for example in crypto, because these red spikes are always liquidation candles. And so you can't really apply the strategy the same way. I always did it only on stocks back in the days. I tried to do it on BTC, and I remember it worked one time very well here, but I also paid lots of stops trying to apply this, and it simply didn't work as well. And so what I really want to say with all of this is you don't have to just follow one rigid system in order to make money in the market. And I know in the beginning, it's probably the best thing you can do because then you will learn about your mental game and everything. And then when you have stability, you can try to experiment. If you're not at this level right now, if one strategy is already too much, obviously you should not force anything new. You can experiment with very little risk. Maybe there's something that just suits your thinking more. Maybe there's something you just can execute better simply because your time schedule allows to do that. And try, play around. There is no single best strategy. There's only the best strategy that works for you. And I can tell you this strategy that I've shown you right now, it's incredible, really. It's so much fun and it's so great, but you need a lot of screen time and you need to find the right assets at the right time, which is, for me, for example, was always the biggest challenge. And once I see an asset like that and I have the time, I simply try to apply it. Because what's the real risk? Me taking a few stop losses, maybe paying 1, 2, 3%, and consider that those, if I play this strategy, I played with much less size than something I play, for example, the BTC short here. Obviously, I mean, it's the 1 minute, it's a strategy. I don't have as much as experience. And I don't have to, because with this strategy, wins compound so fast, and with those wins, you can then scale your account. I've made one account especially for that. I made 100% in a week, and I said I paid 40% back. And then I simply became a bit too addicted to screens, and then I decided I have to do something else and work more on my swing strategy for that reason. But I still know about this strategy, and it's still in the back of my mind. So if I see momentum and if I see volatility, I don't get FOMO or anything. I say, okay, how can I profit from that? And in this case, I didn't buy Luna at the bottom, because why would I buy this crappy shit ass coin down here when it loses all structure? I mean, yeah, on the HTX, it did not lose all structure, so I have to be fair with that. But at the same time, why would I buy this crappy coin down here? I thought about doing it here. Yeah, now looking back, should have done it, but hey, the thing is, FOMO doesn't help me. What helps me is a rational mind thinking, okay, how can I profit from this? How can I expose myself into this? And I obviously cannot buy this and put my stop loss down here. I mean, I could, but yeah, I'm not going to do that. So what else can I do? I can drop on lower time frames, look for opportunities, apply something else. Because if this momentum continues, like for example here, if I always wait for the big pullback into my demand or into my discount area, I simply might wait forever, right? And this is sometimes what crypto does. And if we continue what like it seems like we shape up something like this, I will look for those setups across the crypto market and try to apply momentum. I mean, probably not over the next 3 weeks, but I would and I will if after there is still something like this going on. And so again, to sum it up, look around, play around, try around. There are so many strategies that can be a lot of fun, and usually it's the ones you don't find with 100,000 views, but sometimes even those can work. And it's still all the main question is simply what works best for you. And then once you tried like 1, 2, 3 different strategies, it's also much easier to build your own and to then be flexible should the market give you another sign like this. You don't have to FOMO and wait for this big deep pullback. No, you have something else which you can play out, which helps a lot with your FOMO, which helps a lot if you know what you do with your gains. And so the more you know, the more you apply, the more hands you're able to play actually, the better. The volume MA, I just used the standard one actually. It's 20. Never changed it. Yeah, and for example, when you have not so much, it's totally your thought process is correct, and it's the same thing I thought at some point, and so I looked around what else I could do, and the thing is, if you apply something you know have no experience on, just go with as little risk as possible. Just you try, you feel something. Maybe it's just $1, maybe it's just 5, maybe it's 10. Doesn't matter. You name it, and you gather some experience and knowledge about this, and maybe there's something to it, and maybe there's not, and you will not die from trying with very little funds or even backtesting. I mean, I'm always a guy who's just using a little funds and try, maybe making a separate account to not mix things up, and then apply, because this is where real learning happens. This is where I really know if something works for me or not, because backtesting is looking back, collecting data, and then you try to apply it and you figure out, oh, during this time I'm busy, I can't do that, or I don't want to do that during this time, whatever. So the stock momentum strategy is, for example, something you should be able to scan around the US Open, because until the point of the US Open, you should be able to have identified some assets that might have extended volatility. And then you apply it for a few hours, and then usually you should stop. And so if you don't have time around the US Open, it's probably not the right one, but you can probably tweak it to something that works for you. And again, the more experience you have, the easier it will be to create something out of it that suits you best. And yeah, and just one more thing, BTC lower time frame trades. To be honest, me not being a big scalper, right? But I've taken probably, yeah, I mean, probably even 1,000 scalps by now. I'm not sure. But what I really want to say is, I find scalping most rewarding and most fun and most effective when the market is trending aggressive. And this is my opinion for several reasons. First of all, I made this experience of just performing way better if the market is volatile, but this is, for me, this is true in every sense. And I think the more volatile, the more inefficiencies you will find. And the thing is, if there is a move, let's just take Luna, for example. If there's a move looking like that, you can be quite sure that it's not especially targeting lower time frame traders. Also in Tesla here, this is a 10% move. This move here, this is not targeting lower time frame traders. This move was created to attract higher time frame buyers. You see, we retraced the whole move a few days later, or even just 1 day, 2 days. So the real target was not the scalper in here doing those momentum trades. And the funny thing is, you just align with what the market maker are doing. Maybe what Elon was doing during this move. You just buy into the buy program, which is pretty much the most logical thing you can do. And the problem is with the premium and discount strategy, it often ends up being shorting the flying knife or longing the falling knife. And so aligning with this and not being the target of this move is probably the best thing you can do. And once this starts ranging again, once the volatility is fading, who is then targeted? You see, targeting this high, taking this high, then not really forming a real low, not taking the low, forming the liquidity below, then nuking lower. So it's very hard to identify. It's harder to identify where to go long and to go short, in my view, than in this move, to be honest, because this move is kind of obvious, and you do this until it fails. Maybe you take another one up here and you take a stop loss because you didn't realize that you should go out here once this rejection happens. Because look at this, you will probably take another one here, even though the volume went a bit above average. It was not higher than the green bar, so you could technically try it another time. Maybe you remove the risk after this happens, maybe you don't. And latest here, you will realize, okay, this is not momentum anymore, right? This is not looking like this. It's going sideways. And you should be out already, but if you don't, you took one stop loss. So you paid 1 hour for whatever, how many hours you could collect here. And then you realize, okay, this is definitely not a momentum strategy anymore. This is going fucking against me and I should stop now. But you should realize it here probably, but worst case, you realize it here and you paid 1 hour. And with shorting something like this, let's imagine there is some super fancy level over here and you try to predict the short and you take one short and it didn't work and you maybe take another one. You already took 2 hours. And the problem often is with those aggressive moves, people get then into rage mode and think they need to now prove the market wrong and all that. And yeah, we all know what happens then after. And I guess the thing works on the way down. I think I applied it one time on the way down, profitable. But the whole idea of this is doing it on the long side. And if you think about it, there's a very logical reason for that, because stocks and the stock market usually trends up for the majority of the time. And the beauty of this is you might end up trailing some of this rest higher. So if you take a position like this with 0.7% stop loss, even with low risk, you can acquire lots of shares. And let's imagine you sell 90% of those shares and you have in the end 10 shares left, then you have 10 shares of Tesla left. The worst case, what can happen from here is a break-even stop. And the best case is Tesla rips to 400 and you are still exposed to that. That said, it's a scalping strategy, so you should get the fuck out with the majority of your funds whenever the strategy is telling you. That's why, for example, when I woke up this morning, I realized, okay, damn, I probably should have told people in the Discord that I'm already out of this because it's just a scalp, right? If this goes to $1, I will find some exposure again. There's no reason for me thinking, oh yeah, I need to keep this because if it goes to $1, I can whatever buy myself or have a lot of money or make a lot of gains. No, if this goes to $1, there will be another day where it outperforms the market significantly and we have big imbalances and I can do the same thing all over again. So there's no reason for me to try to force hold this position to a higher time frame target. This is not the idea of a scalp strategy, obviously. But done right, could be possible. Good question. This is, I said it's not my strategy, but what I do is I look for volatility. Sounds super stupid, I know, but you have some assets that are more volatile than others, and you simply wait for them to get really volatile. And also, like Tesla is actually a bad example because it's not one of those assets. So this guy I've learned it from, he's usually applying it to the worst crap you can ever imagine. Like the volume is sometimes something you wouldn't touch with like, yeah, you wouldn't really touch. You never heard of that. You look at the chart. He opened up a 1 minute chart and it was like, what the fuck? It's like a 1 second chart with gaps. So I think you need the most important thing is you need a lot of volatility and you need to learn to read the signs before the volatility hits. And as said, this was still my biggest obstacle. What I do now, this is not my main strategy. So what I do now is to simply have my assets that I always track. And if I see that and I have the time, I simply try to apply it. I'm not actively looking for it. If I find it, I try to apply it. If it works, nice. If not, not. And yesterday I tried it with crypto. It worked kind of nice. So I'm gonna have an eye on Luna over the next time because if it goes to $1, let's say, then I will have many opportunities to do that till Sunday, at least. Yeah, similar question, impulsive trading PI. I mean, the thing is, like, remember Tesla here again? What I said here was the first move you see, it goes ranging, 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 and then this happens. You will not be exposed here because these are 2 minutes, right? There is no pullback on the 1 minute. So you know, okay, this looks very, very impulsive. We have the volume bars, so you can just try it. If it fails, it fails. Then you know if this first idea fails, you know, okay, this is not it. You paid 1 hour. If this is it, you can try it again, and you can try it again, and you can try it again until it's not it anymore. And this is how I would define it. You cannot, in my view, you cannot really predict this beforehand. The first impulse will probably happen without you. And as said, I have done this with the stock. I don't even know the name anymore. I just copied this, or I just looked at the stock from this guy and then applied the strategy as I thought it would be right. And he has some kind of great system to figure all of those things out. He has also some kind of metrics. I think he's looking at float and all that. I think we talked about this before. Somebody asked me about order flow, and there is stock to float kind of, I don't know. As said, it's not my specialty. I just know that he has a very good way to track that. But he's a day trader, scalper, and he does this every single day. Um, and so, yeah, he has some kind of system to find those things. And as I said, this was a stock I've never even heard about, and this thing ripped 100% in a single day. And you had like much more opportunities to do that in between. Yeah, it truly is. It truly is. It creates imbalances. It creates opportunity, really. And so I also like volatility and the most volatile markets. And that's also why I have my altcoin stock list, because I think they are even more volatile than altcoins for most of the time. Altcoins don't even move for 70% of the time. And so yeah, volatility. Oh yeah, we're already in overtime. So I'd say we wrap it up here. think it was a good one. Let me just check the list, but I think we have everything. Yeah, it's looking good. Yeah, good stream. And as said, guys, prepare some questions, apply some things, and then, as said, the whole thing is going to be most effective the more questions you ask, the more experiences you make, because then we have something to reflect on. As said, like right now, I have a lot of things to show because I'm in my office, I'm trading myself a lot and also the momentum strategy. But I know it's most effective if you guys trade and ask me your questions or show me your setups. So do that, guys. And other than that, we talk on Saturday. It's going to be the last stream before my holiday. And I'm going to prepare some fancy topics again. Other than that, have a great week and bye-bye.